Hey friends, Kevin Goehring, your Sacramento, Stockton area realtor and lender here with this week's weekly real estate report. Boy, I got a lot on my mind this week, so hang on. Here we go. So let's take a look at the chart, and I'll tell you what I'm thinking about here. So looking at the chart, what's going on this week? Well, as predicted, we've got the seasonal drop in the available inventory. Fewer and fewer homes on the market, which, as I keep saying, is going to drive prices up. But stand by, because we're going to talk about that. Prices have been dropping. And as I've been pointing out, we have dropped to this historically low level down here. And the peak that we reached during the peak market here has almost equated to the bottom of where we normally are. So it's kind of dismal out there. Slim pickings, you could say. Pending home sales, well, it's dropped, but now the last 2 weeks, it's kind of been going the other way. We had a drop in the median home prices, but it's been climbing back up again. Now, this week we saw just a little bit of a drop, but again, I'll have to wait and see what those numbers come in and look like next week. So here's what is on my mind right now. So I've been saying that the whole cause of what's going on in the housing market, why prices are just run away, is because supply and demand. Well, that is true, but there's a lot more going on here that we kind of need to take a look at. And the reason I want to look at that is because it's going to help predict how much longer we could expect to see this. Now, if it was simply just a case of supply and demand, then we could simply say, well, as soon as more people decide to put their house on the market, then boom, problem solved. But of course, that's not necessarily true because there's so many people in the background waiting to buy homes that I think even if we had a flood of homes come on the market, we still have a flood of buyers waiting to buy them. There's all this pent up, people looking for a house. So why the housing shortage? Well, first of all, let's go back and take a look at what happened. Let's say about March of 2020. Remember what happened then? Pandemic came out. So we go back and we look right about there. Well, suddenly everybody panicked and the buyers just disappeared, right? And they disappeared and it didn't take long. So we go, middle of March to the middle of April. So for basically 30 days, buyers kind of panicked, backed out. What's happening? Interestingly enough, sellers continued to put their homes on the market for 30 days. Now, what is that possibly? Well, my own personal experience, we had a lot of buyers who were thinking, they were getting ready to put their house on the market. And most people just don't wake up in the morning and say, oh, hey, let's sell our house. It's a process. It takes about 90 days for most people to make that decision, pull the trigger. So they want to fix it up. They want to get the painting. They want to get it done. So these people are still in motion. They got their house listed. But those people who were not quite as far in the process backed off. We have a pandemic. I don't know what's going to happen. Job insecurity. Let's pull back, right? And so they didn't sell, and that just caused this drop off. But interestingly enough, we had a lot of buyers, and as the talk has been, a lot of buyers who were moving different areas. They were leaving the more urban areas, moving into suburban areas, working from home, allowed them to do that. So a whole different change in lifestyle. All right. So we have that happening. But so I guess what we want to say is at that point, we have this drop in supply. We have an increase in demand for other people wanting to buy homes, moving out from the city to the suburbs. Okay, so now we have a supply and demand problem. Prices start to go up. One of the guys I love listening to on the radio, Tom Sullivan, give him credit for this one. He keeps saying that the cure for high prices is high prices. And it makes a lot of sense. Think about, you want to buy, houses, cars, you want to buy, we'll just say a car, right? You think about buying a brand new car. And so you go out and you're thinking, hey, you know what? I can spend $500 a month as my payment. And you have something in mind and you show up at the lot, you look at the car that you can afford is not at all what you want to buy. You don't like it. It's like, no, I have a nicer car than the one I'll be buying right now. So what do? You leave. You don't buy. Enough people do that, prices start to come down, right? Prices go up, people stop buying, prices go back down. So the best cure is that. But what happens here is with home prices, we have to look at it a little bit different. Most people are not pulling their wallet out, putting a home on a credit card, paying cash. I know you hear about a lot of cash buyers, but for the most part, most people are financing a house and they're payment sensitive. They're going to look at a payment, right? And you get to a certain point and it's difficult to finance a property. You don't have enough down payment. Maybe you can afford the monthly payment, but you're required to have a bigger down payment. Or with the government, we have Fannie Mae and Freddie Mac. I don't want to really bore you to death with this, but basically banks lend money. They package these loans together. They sell the package to Fannie Mae, Freddie Mac, and they're the government entities that buy these up and sell them off to investors. Now, in order for these loans to be packaged up, put together, they have to meet a certain criteria that is set by the government. The government is saying, we're not going to buy that loan if it's over this limit. We're not going to buy that loan if the down payment isn't this much. So we're not going to buy the loan if the borrower's debt to income is over this limit. We're not going to buy the loan if the credit score isn't this level. So the government really kind of sets what's going on and sort of adjusts that pool of buyers, right? So what the government has just come out and said is, hey, wait a minute. It is really, really expensive to buy a house right now. And these loan limits that we set, people need to go above that loan limit to buy a house. Well, you can still do that, but then you go out to a lender where the rate is much higher because it's not government backed, and so it becomes more expensive, and it kind of puts the brakes on that. Well, for the most part, and I'll just, and it varies by county, and for the most part, across the country, Fannie Mae, Freddie Mac has said, okay, we'll go up to 548, 250. And after that, it's considered, outside of us, and that's too expensive, and you need to go to the private bank. And now in some areas, we call them high cost areas, they'll go as high as 822, 750. I'm talking San Francisco, Hawaii, places like that. All right. The government has just come out and said, you know what? We're going to take that 548, 250. We're going to 650. We're going to raise this up so that more people can now qualify to buy more expensive homes. And for those high cost areas, we're going all the way to almost $1 million. So right away, the government is saying, you know what? Houses are expensive. It's hard for you to get money. So let's just give you more money. So that is going to increase the amount of buyers that now qualify for more expensive homes, which means that there will be more buyers available for more expensive homes, which means that, you guessed it, supply, demand. I expect to see those more expensive homes start to get more expensive. And of course, that holds true for all the way down the line. More borrowers available for all these homes. So the government is basically just, kind of throwing some fuel on this housing crisis, I believe. So what do we have here? So we have supply of money is easy. Let's look at something else too. If you've got a home that is worth more money, and rates have gone down, you can refi, pull out a bunch of money. And what can you do with that money? If you've got enough income, you can go buy a second home, a third home, start buying rental properties, right? As inflation looms, people are thinking that housing is more of a safe investment and more of a hedge against inflation. So you can see more people trying to go out there and buy more homes. So again, more of a demand, less of a supply. What else do I have here? So we got easy money from cash refi out. We got the loan limits have gone up. Rates are very low, which makes it easier to buy homes. More people qualify for these homes. And I don't want rates to go up, so I'm not going to knock that one. And then on top of all of this, we do have a shortage of homes because home starts are low because there's labor shortage, there's material shortage, and you can throw a bunch of other stuff in there. Government zoning laws, restrictions on building. It just makes it tighter, more expensive. So we have this perfect storm going on where we already started with a low amount of inventory, and then the government is just making it worse. Now, what am I advocating here? I got to be careful here because I don't know if the cure is really that pleasant, but the cure is definitely don't hand out more money, raise interest rates, which I hate to see. And by the way, I keep saying it, the government does not directly control the interest rates that we have for mortgages. It's an open market thing, but in an indirect way, they absolutely can control that. So this is what we got going on. So what does it mean? What does it mean? likely we're not going to see an immediate and sudden change in this market. So before, when we look back at 2008, what happened is that there were a lot of loans that people could not afford, right? I was in the industry then. I saw it. I hated it. And I advocated very loudly, please do not accept these 2-year adjustable rate, 5-year adjustable rate mortgages. Do not, under any circumstances, go with these pay option arm, pick a pay. In my entire career, I talked more people out of them. I only did 2 of those pick a pay loans in my entire career. There were only 2 people I could not convince to not do it. One was an investor, knew what they were doing. The other one was a refi out of one that was bad into one that was a little bit better. I could not convince them otherwise. Even called in family members. Please talk to your parents. This is a huge financial mistake they're making. 30-year fix is a way to go. So most people are now in a 30-year fixed mortgage, which means the payments are set. So you're not going to have payment shock. You're not going to have this adjustment. You're not going to have this sudden, I can't afford the house. So that is probably going to insulate us from a sudden foreclosure wave coming forward. The one danger is the lack of income, but as you can see, there's job openings everywhere. Now, whether or not the job opening pays enough to afford your house payment, that's a whole nother story, but certainly there's not a job shortage. So I don't see foreclosure wave coming forward. I also think that the government will throw, especially this administration, they will start throwing money at anybody who's got a foreclosure problem. So I don't see that happening. So I say all that to say, what is the prediction? I really think we're going to see home prices continue to hold steady, if not get worse, meaning higher, for at least another year until something changes. Now, what could change? Fed could start raising rates. We could see stock market problems. We could see something whereby housing gets, the rates go up in mortgage rates. I just say it that way. So mortgage rates go up. If they go up, then that is going to cause a problem. The house that you could afford at, if you can afford a $2,000 a month payment, which that won't get you anything these days, and suddenly, that $2,000 a month would buy you, we'll just say with your down payment and everything, could have bought you a $400,000 home. Now that same money will only buy a $350,000 home. Well, that's going to cause home prices to, in theory, it always has, drop. But we will see what happens with this large pool of buyers still waiting. So I know that was a lot, but I guess the whole point of that is expect to see home prices continue to at least be high and not drop for at least, and I'm just guessing here based upon what I've shared with you, about another year. So interesting to see what your thoughts are. What do you think is going to happen with that? So just go ahead and leave a comment. I'm reading them. I'm looking. I'm interested. So that is what I have for this week, with the exception of, I didn't talk about rates. Let me pull up rates real quick. What did Freddie Mac's rates this week? They're pretty stagnant. They went up a tiny bit, 3.1%, 0.07 of a point up front. So really rates have just been right around 3% for just a very long time. And let's hope I kind of like to see rates stay low. But anyway, that's all I've got. Take care. Have a great weekend. Bye.